Hey guys, so I'll be introducing you to analyzing the deck. Some people have seen I've done some content for them, but we'll just redo it. Let's do that. Cool. All right, so this is our Nasdaq, right? The deck. Let's come here. So this is actually quite simple. It's pure support and resistance, really. Let's see. Let's do that. All right, awesome. So these are my favorites. Cool. We draw support and resistance. I like dealing with the color black, so let's fix that real quick. And you can add text here, right? So we'll say support, right? And if you zoom in, there it is, right? Now you'll see the significance of this later on. I actually need to add something here. Let's go back. Also, in case you're wondering, charting platform I'm using is called Take Profits. I do have another video. It's completely free compared to TradingView and whatnot, and I like how it is. So yeah, cool. Let's add something else. Let's do this. I need to add. I like using. You'll see now rectangles. So I like using rectangles for points of interest. As I said, I'm a black dude. I deal with black colors. Let's do that. Cool. All right. I just want to add that to my favorites. And if you, I'm sure you can see it already. It's such a clean charting platform, especially for something you're getting for free. And yeah, now we'll draw this as well, right? That's our. I'll just call it point of interest. There's probably different names for it, but let's just work with point of interest. So we could do that, and then we'll say point of interest. And then I'll just copy all of that text. Come back here. Same thing, right? Cool. Now we shrink it down. There you go. All right. Awesome. Now that's our H4, right? I also like using horizontal rays, so let's work with that as well. You'll come here, you click that, say black line. Remember, this color thing is just preference, really. You don't have to complicate it. Now, where do we draw all of these? Anywhere interesting, where price has done something interesting. What do I mean by interesting? Anywhere where we've had rejections, right? Look at that, look at that, look at that, rejections, something special is happening there. In fact, let us expand this a bit because that area is a bit, yeah, larger. Cool. Now, this is just, we don't analyze on the H4. We just wanted to get a high level of where our rays should be plotted and where our trend line should be plotted. But what we actually focus on is the M15. Let's see that. Cool. Now the M15 always gives us our entries, right? Yeah, awesome. Now we do the same thing we did where we drew lines wherever price seems to have given us something, but now we draw it on the M15. That will give us better entries. You see that right there? Why? Because look at how price was reacting. Look at that. It broke out, retested. Look at that as well. You see, we drew this here. We could extrapolate it as well, actually. Yeah. Bam, bam, bam. There's something I'm missing, actually. Let's see. Does it exist here? There we go. Cool. As I said, I like fixing my colors up, so forgive me for that. Then We'll make this black. Oh, we could stick to red actually. I like red. Yeah, look at that, right? Cool. Let me delete that. Now we've drawn everywhere where price. I mean, you could keep going with this. In fact, if you look at that, do you see how it was how it's played out over the times? Even if you bring it here, right? You see how it's constantly proven to be important, right? Cool. Now I'll release another video. You can actually use this as AI, but I'll show that in another video. Right now we want to focus on how to analyze. Cool. Now we've drawn all of those out, right? That's the first thing you got to do. In fact, as I said, you could extrapolate this and realize it's been significant. Price doesn't just reject at some point for nothing. There's high chances something important happened there. Look at this. If we extrapolate it, I guarantee you there's other areas where it would have done something. You see that? You see that? As long as we stretch it out and then move it accordingly. Yeah, look at that. See how it's always proved to be important. So high chances when there's a rejection somewhere. It's rejected there before. It's not its first time. I work on the assumption of that. You could test it out obviously and see, hey, has this actually proven to be significant? But from what I've noticed, price doesn't just reject anywhere for nothing. High chances it's rejected there before. Cool. Now, how would you look for entries? You just wait it out, really. That's why I said the importance of diagonal. If you remember in the beginning, I drew it out on H4. You know, that plays significant importance. I mean, if you look at this as well, right? It just gives you better entries. So I know right now it looks very daunting, obviously, once you say, you know, but this is just drawn out for you. And I like to think of it as the gift that keeps giving, because you will always find an entry around those regions and you just have to wait it out, which most people struggle with, obviously, waiting, right? Like, for instance, if I was looking for buy entry, most people go on their daily whatever for you know, better trades. Let's say you're looking for buy somewhere here, you'd obviously wait till it breaks that trend, right? Because as another thing I forgot to mention, let me just shrink this down for you. See how Nasdaq has always proven to go up? That's no coincidence. So something to keep in mind. It always seems to go up, right? Now, the reason that is important, I just want to go, let's see, does weekly show what I want to show you guys? Okay. Our charts unfortunately end here, right, on the 30th of June. But if you go on TradingView, you should see more, and you'll notice that Nasdaq has always proven to rise. There has been crashes or whatever. We can't even call this a crash really, but huge drops in price. But it always has proven to go up. I think we can expect the same thing here. Something like this as well. See how that happened, and then bam, similar thing should happen here, and then bam, you know, we should hit the 30k regions. But that's long term, and we're not swinging here. We trade on the short term. But just keep that at the back of your head, that we are looking for a buy at some point. It's easier to just catch the thing as it's moving up than to try and capture the entire move and try and set your TP somewhere here, right? Unless you're an investor where you're putting money that you're going to hold for long term, then you should do that. Now let's come back here to M15. Yeah, here we are. Cool. See, all those lines are crossing, blah, blah, it's complicating things for us. But those lines will pay us at some point. Now, let's go to, let's reset this chart view. I just want to look for trades now, right? So let's say now we've drawn this out, right? Drawn this out. Here's our candle. If you've read the candlestick Bible, you know this shows some significance. The bears pushed price down here, right? And for me, that would have been a perfect entry for a short. Let me just fix up something real quick. got this the other way around. There we go. Okay, cool. Yeah, there we go. You would be looking for shorts, right? So short position, why? So first one here, we saw that huge rejection, right? And it closed there. Ideally, you always wait for candle close. I would have entered there, being the optimistic guy that I am. Also, looking at this huge momentum candle, that gives me, it engulfed these previous bullish moves. That gives me hope as well that, you know what, we are going to the downside. I would have entered here. Uh, Ideally, my TP1 would have just been the next line, right? That's why I say it's the gift that keeps on giving. Those lines give me my next TP or my SL or my next trade, always. Right? So that would have been entry one, and I would have made my money there, right? And it would have been in 30 minutes. Nice and easy. From 624 all the way to 414. Nice and easy, 30-minute trade, right? It came back here. I'd be waiting to see what happens. I'd probably enter after that candle. This engulfing candle closed or engulfed all three of those. So definitely an engulfing candle worth noting. So I would have entered here. My TP might have been here as well as TP1, but TP2 would have been, hey, it's looking to create a new low, right? That's how I look at it. If price comes down all the way here and starts rising again, and then it wants to dip again, it's not going to stop there. High chances it's not going to stop there. This time it wants to create a new low. So my TP would have been new low, or I would have just, let's just do that. I would have just placed it slightly. I would have just placed it at that low, but high chances it wants to go below. I would have placed it there just to be on the safe end. My SL now is if that engulfing candle is also engulfed. So I took it based on this engulfing candle, right? That's what I would have taken my trade on. Let's come here. So this engulfing candle is what I would have taken my trade on, which means here when it closes, right? Now, where's my SL? If the next move is bullish or goes up and it engulfs this entire bearish move, then it's starting to look like a different chart pattern. If you've read the candlestick Bible, I will keep referencing it. You would know if the next candle engulfs this one and it's bullish and it closes like that, then that looks like a bullish tweezer. So different chart pattern, it's time to exit. However, you will note that I would have entered here. It would have went in my favor, played around with me, came back down, played around with me, came back down, played around with me, came back down. That's what I like about Nasdaq as well. If your direction is right, you get quite good momentum. Let's say you missed that trade, right? That engulfing candle, and then you see this candle here. The next trade entry would have been this one, because this one engulfed the previous one, or it looks like a bearish tweezer. So we would have entered here, all right? And you'll note the nice thing about these entries is because Nasdaq has momentum, they generally just go straight in your favor. It doesn't play around with you or manipulate you. And I'm coming from gold, which manipulates you a lot. So yeah, I know what I'm talking about. Anyways, let's say I entered where I said I would have entered, which is here. Cool. Would have caught that trade nice and easy, right? What was my TP? If you remember, I said the next low. Or, just to be safe, where it went last time. The lowest created, that would be my TP. So that would have been nice trade, right? 400 points. Cool. Now, let's say I'm out now, right? I'm out of this trade. I've made my money, right? I would have probably been out there. What's my next trade entry? I would be waiting now. I wouldn't be trading or anything. I'd just be waiting. I'd see that go up. I'd be waiting for an entry here, which I wouldn't have gotten. It would have shot straight down. I would have been like, wow, okay, It's touching here. What must happen now? You see how it closed right above the line. It didn't shoot straight through, which would have given me hope for a breakout. It closed right above. So I would have waited for my next candle close. Bam. Was that pin bar or hammer? And I would have been like, cool. At the close of that candle, I would have been in that trade. Where would I have set my TP? I would have set it somewhere here, maybe. Reason being, that's the highest price we got previously, right? So similar trade idea here as the previous one, where I placed it where we had received the lowest low. Here, I would have placed it where we received the highest high, which is somewhere around there. Yeah, that trade wouldn't have went all the way, but I mean, come on, guys. This is from 174 all the way to 314. That's good money. High chances I would have exited anyways. Cool. And I might have waited for it to turn. So maybe I might have closed here. High chances I would have closed somewhere there, right, on this candle. Especially once I see it close on bearish, I'm like, nope, it's not looking safe anymore. And I would have been waiting for the next trade. Cool. Next trade comes. This huge momentum candle to the downside. It closes below. I would have been in there. Closes below. I would have been in there. My TP would have been my next line, which we'll look for. I'll show you now. So it might have been somewhere here. And you wouldn't have seen that candle. So how would you know to set it there? You'll see. Where would my SLP a bit wider at the engulfing of that candle? So I take it based on this momentum candle, right? Which is, yeah. So if it closes, if it comes back and closes there, there's no ways, high chances now it's creating a bullish tweezer and it's actually respecting this as support. However, I would have entered here. Sad thing is it would have played around with me for about, what was this? So 15, 30, 45, an hour 15, and then bam, an hour 30 minutes later, I would have been in profit. High chances I would have added here. Reason being that candle is also huge momentum, and maybe that would have hurt me based on how much I added. So what I generally do is my first entry is high lots, second entry is lower lots, so that when it does something like this, it doesn't hurt me. And then the next 15-minute candle would have been straight to the downside. Now, I said I would have set my TP here, right? How would I have known that? Remember, I said, when you see candles do funny things, high chances, it's not the first time it's there, right? It's not the first time price is there. I need to use a horizontal line so that we can draw that all the way. Yeah, let's come here, black color. Right, now let's zoom out. See that? Cool. Let's ignore that one. Let's keep going back. See that? Right? Strange candle behavior, strange candle behavior. Look at that breakout trade. Look at how it rejected there. Look at how it rejected there. Look at how, something significant. So don't think of it as a straight line. Think of it as a region in price. That's why I like drawing rectangles, but we'll work with this. Think of it as a region. So how it played around here, how it played around here, how it played around here, how it played around here. You see that? So that proves my point. That's why on my main chart, I usually have that drawn out already. So I would have set TP there. Let's go back. Wait, let's just say reset. Cool. Now, there's our trade, right, that we would have taken. Now, where does my strategy fail me? And how? Obviously, it fails me because also, this is a downtrend. Best trades to catch are the ones where price keeps going down. You'll stay safe and your win rate will stay very high. If you're a bit greedy, like myself, you're looking for buys as well in that trend, and that's what hurts you sometimes. So, for instance, I would have entered here as well. You see here where I would be like, first the previous candle rejected, it couldn't close below. Second candle tried, came back up. I would have been like, oh, the bulls are in power. I would have entered there. I would have set my TP somewhere here, because remember, what's the highest high we've received? It's this one, right? So I would have set it there, and my SL would have been below that candle. So the basis on which I'm taking my trade, which is this candle, if it closes lower than that, it's engulfed that previous bullish move, which means, okay, cool, maybe the bulls aren't in power anymore. So that would have caught me out. But the nice thing as well with the strategy is you get nice trades, right? And your stop losses are quite minimal. Look at this. This is from 28937 to 28880, which is not too bad, right? And what would happen with me after that takes me out? I'm a bit annoyed. I'm like, cool, you know what? We'll wait it out. If you're aggressive, you would have taken this. The second candle close, you would have taken that. Longs at our previous low, so somewhere here. Remember, I said high chances. Price doesn't do funny things. High chances. That's been significant at some point. And you will realize, yes, it has. It's that region we drew out previously, right? Cool. Now, I would have taken that. It would have taken me out, right? High chances would have taken me out because my SL would have been somewhere there. Previous candle being engulfed. The candle on which I took my trade on being engulfed. So it would have tapped me out. Cool. And my TP would have been somewhere here. Would have tapped me out. Now, it would have tapped me out. That candle on which it would have tapped me out on. Do you see how it closed? So I would have waited for that to close. I would have been like, oh, we might get buys instead. So I would have waited for this to close and see how it went there. And if you didn't wait for it to close, that would have caught you as well. But it's only 15 minutes. Wait it out. Closed. Oh, okay. It's still in cells. I was just early. I would enter again here. Same take profits around that region. Now, what's my SL now that I'm entering here? It would be this candle's high. It's like, cool. If it engulfs this candle now, okay, then yeah, we're out. And I might have taken a break after that. Back-to-back losses aren't nice. But I would have been in here, right? Cool. Straight, you see how after that it went straight to my TP. Awesome. The move we would have caught there covers that loss. So great. We would have made our money back. In fact, because of risk to reward ratio, we've made 3 times the money we lost here. If we're still using the same lot, which you probably would on like a funded account. Now, I'd be looking for my next trade entry. As I said, I'm a greedy dude. I don't advise it. I would have taken this trade as a buy, right? Because of the candle close above our significant region. I'd have taken it as a buy, and hey, my TP can be that previous high we had. As you can see, 15 minutes later, it would have tapped me out. My reason for the buy, if it engulfs the previous candle, which the next candle would have done, right? Bam, taking me out. What's my SL like? It's very minimal though, right? I wouldn't have lost a lot of money. And then I wouldn't be like, hey, that's a bearish tweezer. Second candle is my signal. I'd enter on the sell. I'm like, oh, I was wrong. It's a sell. Next price. That's where my TP would be. High chances I would have closed somewhere here though, because there's like 2 hours playing out. So let's say I would have closed there. But see how you could have placed it there as well? Cool. I would have entered this trade. And remember, obviously, my risk to reward ratio is nice and all, but there's certain trades like this one. I would have taken this one. 3 bearish candles, and this one, you know, tried to move up but couldn't. I would have taken that. My TP would have been somewhere there. Remember, I said if we see rejection, high chances price has been around there before, and you would have drawn that line out already. However, let's say you wouldn't have. What I'd advise is, if you see, hey, this is a downtrend, where should I take my stops and where should I take my TPs? Then look for a time on the charts where price has been around there, like here, right? This whole uptrend, price has been there. So I would have plotted that, 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 you know, and then that would have been my stops and take profits here. As I said, if you extrapolate it, high chances it's not its first time doing something significant. So yeah, see, look at that. And look at how it played around there. If you extend it, you'll see that, hey, there's far more. Cool. So these are the trades we would have captured, right? And that. Now, once it's here, I would have sold again. See, because I would have caught this, seen it play out, but it's not exiting the region, right? So I would have been like, let's wait it out. See, once I see this, in fact, I'm an optimistic dude. Once I see this next candle, I would have been like, I'm in there. TP would have been the previous TP, and I would have just whacked it and straight even lower. I would have been annoyed a bit that I missed that entire move, but cool. And then this candle would have engulfed. As much as it hasn't exited the region, that engulfing shows that the bulls are covering this entire short move, which I would have made money on, right? I would have been in there. TP here, why? What's the highest high we received around this area? Or for the past, let's say, past day, because if you look at this, it's all in one day. For the past day, what's the highest high we received today? Where has price been? I would have taken that. Nice money. Where would I have taken the trade? I would have taken it either here on engulfing, right? And I would have made my money. Or the second trade entry would have been here. Why? Because I can set my stop loss right below this if price engulfs that, because maybe it wants to do the same thing it did here. And my TP, where has price been? Remember, it's here, right? And let's just move that like that. Bam. Would have caught that nice and easy. Almost minimal drawdown, right? Cool. Price would have exited. That would have caught me out. So I'm showing you the trades where I would have been wrong as well. See here, especially here, that would have been a sniper into the. So I set TP around this price, right? Because we've had price there before. I'd set it slightly above because maybe it wants to create a higher high now. Maybe it's I would have started predicting a reversal trend. Hence, I assume it would have caught me out. So I would have caught that, and 15 minutes later, I would have been out. However, if I'm out 15 minutes later and it's engulfed this, I'm now looking for sales. So that would have caught me out. Now I'm looking for sales. This would have closed below this region, right below. I would have been in there. So close below, I would have been like, hey, let's go back there. Or if I'm being optimistic, that would have been an optimistic TP, but I would have been like, hey, we'll see how it plays out. Optimistically, I'd place it around here, right? But maybe just here, maybe it wants to type. And remember, we'd see how price plays, and we would have been out. However, where would we have set our SL in Paul? We would have set our SL. The trade on which I took the candlestick pattern on which I took the thing on, the entry on. So at its close, you see how that would have went straight to TP? Or if we didn't, it would have went right to our direction and we would have been happy with ourselves, right? Cool. My SL would have been there. We would have, around this point, guys, as I said, I show you these TPs, but you're also happy with the money around these points, because look at this. This is 28695. Around here is 285. So that's a plus 100 points. Just exit, bro. You've made good money. With a 0.01 on a 100x US take, that's about $100, which is about 1.5. That's good money. So on a 0.10, you can imagine that's 15K. And I ran like 0.25. So I would have made about 30K on this already. So I would have been out. Cool. I'd be waiting to see what price does here. See how it didn't. I would have waited for this close. And I would be like, hey, it struggled to break. Let's wait it out. Bam. That happens. I'm like, oh, it's going to turn again. And ideally, you want to wait for that and the next candle. But as I said, I'm an optimistic trader. That messes with my win rate sometimes. So I don't advise you do that. If you wait it out, your win rate might be way higher than mine, just less A plus setups. So this would have been an evening star, right? That right there, evening star. But I would have just entered based on this. But let's say you entered based on the evening star. Where has price been? Here, right? We're looking at this low because we're looking to catch quick trades. We're looking at that low. We would have captured that. That would have been 717 to about another 100 points plus minus, or 85. I mean, but if you use the rule of thumb of I'm trying to capture 100 points, you could actually make it out of that 100 points here. And then it would have come back engulfing. I would have been in there again. Bam. TP, same as previous, and would have hit again. Or slightly lower. It might have not hit, but I would have closed once, especially once I see the doji, because doji means, hey, price might want to reverse. It's a reversal signal, right? Cool. And then here, now I'd be waiting again. Hey, am I going to get sells again? See how this is a region now that price has formed just in this session. Look at that, look at that, look at that, look at that, look at that. So it's like a resistance. On the breakout of that, as much as we have regions here, let me draw the horizontal ray so you can see what I'm talking about. Remember, this is real time. So in real time now, I'm not looking at all these regions. I'm like, what is price doing right now? See how we have that? And I would have waited. It would have broke out. Bam. You wait for the close. Always wait for the close. This can manipulate you if you're the type of guy that doesn't wait for closes. It does this, but it's still bullish, so I wouldn't enter. This now engulfs the previous. I'm like, oh, okay, let's wait for next candle after that. That next candle engulfs the previous bearish candle. I'm like, okay, next one, okay, next one, 30 minutes later, okay, okay. Here, I would have been in there. So, see, after this whole momentum candle, I would have been in there, and I would have been like, hey, remember that TP I said long way back? Let's try that again. Where's my SL? My SL is at the engulfing of that candle that gave me the trade entry, because now it's a bearish tweezer, right? So yeah, right there. Bam, bam, bam. Would have, so to be on the safe side, I wouldn't recommend adding entries. Nasdaq manipulates you with the second entry. So rather just play it safe, stick to one entry per trade. To be on the safe side. Remember, once you have more money as well to experiment, you could ideally, like with me, for instance, I would have seen this and added another trade, and look at how that would have messed with me, because it would have went straight back to break even, played around, blah, 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 and then went to my TP. So don't add trades to be on the safe side. Cool. Then I would have seen this now. This engulfs that. Okay, let's see how the next one plays out. Straight there, I would have been in that trade. TP, hey, we've had a TP here before. Let's set that again. Might have played around with me, but remember, so we need a wider SL here. The candle on which you are basing your entry on has to be engulfed. If it's a bearish signal, it has to be engulfed. Or if it's a bullish signal, that has to be engulfed as well. So you would have needed a wider SL here, because look at the candle we're taking the entry based on. And remember, I would have said TP here. So now this is not such a smart trade in terms of reward ratio, but cool, we'll let it slide. You see that there? Because it has to cover that entire move. It wouldn't have. It would have played around us and then straight there, and then I would have closed round about here. So that's like a 1:1. Cool. We would have let that play out. We're chilling now, playing PlayStation if you have a PlayStation. Now it comes back here. So I normally set price alerts. See these amounts of rejection. I also want to show you where I go wrong. These amounts of rejection. So we have that rejection, I'm like, nah, it wants to sell. I would have been waiting for bearish candle though. So I'm not too sure if I would have entered. But as I said, optimistically, I would have entered, right? TP, hey, I've had a TP here before. SL is here, the engulfing of the candle I entered based on. And it was engulfed. Cool. Now I'm looking for, if that's engulfed, then I'm looking for buy signal. And then I would have seen this pin bar. I would have been in there, which is like 15 minutes later, right? So I would have been in there, set my TP here, optimistically. But once I saw this bearish candle here, I would have exited. I would have been like, cool, it's fine, I'll look for another entry. So as you can see, it works. Now look at this. That's why I said draw out all your lines, because they are the gift that keeps on giving. You see, if you had placed your TP here anyways, you would have been out anyways, because that line has been significant. So it also depends on your behavior psychologically. Are you optimistic and you want all these trades to hit, or can you watch a trade play out without you in it, right? Because this would have happened. I would have been like, oh, that's rejection, rejecting. I would have entered this trade, and I would have struggled to close. Yeah, at about 30 points, I might have not accepted that, and it would have whacked me, because the next one would have engulfed. I would be like, cool, I'm wrong. Enter buys. Remember, when you're wrong, your idea can change because it's based on these lines, right? Pin bar, cool. Where have we had TP? So small trade, right? Because that's a 51-point move. And you know what? You would have still made your money. Remember, we said TP here. Or I would have placed it here. But you also monitor what price does. So it does this, it does that. And then bam, that engulfing there. And then this. Now this starting to look like an evening star exit, and then wait for next entry, which might be sells if it breaks through this, which it didn't, right? It struggled to break through that. So let's do this, and let's draw another thing. It struggled to break through that. Here's your two bullish signals. I would have said, okay, cool, maybe this time we'll go there, right? And bam, bam, bam. Let's see, it will take about 2 hours for your trade to play out. About 2 hours, which I don't think is bad. But yeah. And then here again, bam. See, when that closed, I would be like, okay, it's struggling in this area. It's really struggling. The next candle, this engulfing, I would have been in there. I'm like, oh, let me not miss that trade. Now it's looking, and now we're starting to see somewhat an uptrend, right? So rules of uptrend: higher high, higher low, higher high, higher low. That's all you need for an uptrend. So let's see if I draw it here, right? And I say higher low, HL. Let's use HL. Let's use black. Let's make it larger, and let's use bold. Okay, cool. HL, higher low, right? And as I said, let's try to make it a bit more. 20. Cool, that works perfectly, right? Higher low, right? Because there's previous low, there's our new low. Higher low, enter, and I would have been looking for the next high, which, hey, that signal here, right? Now I would have caught it. Cool. Then would have consolidated for a while. This would have tapped, bam. Now I'm looking, remember, higher low. Let's see. So you need to also understand your rules of an uptrend, right? High low. Let's do that. Let's do that. Let's do that, right? So this is HH, 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 meaning higher high, higher high, higher high. Because look at that, high low, bam, higher high. Now here, you know, it breaks the rules of an uptrend. But remember, what was the close? The close is still higher. So that's why the close is so important as well. If you're basing it on wicks, then obviously that trend doesn't exist anymore, that uptrend. But if you wait for the close, it's still higher than our previous low. It didn't close at a lower low, right? So still valid. Bam, we would have gotten that. As I said, I would have been in here, right? My TP or my SL would have been a bit wider because of that. However, you could also have it here, because this is acting like a mini support here. Remember, on the 15-minute, this has been a support for quite a while. So here, right? You see how it's always been a support. It's always been a support. I would have had it somewhere around there. Because also I don't like having too wide of a stop loss as well. I don't want to get hurt. So we would have had it there. And then bam, straight into the money. I would have had it, my TP around this line, because remember those lines are very important to us. And that would have hit very quickly, actually. Cool, higher high. Now we have a mini downtrend here. Why? Higher high, right? Then we get our next high, but it's not as high. So what's this now? It's a lower high, LH, lower high, right? Cool, we are officially in a downtrend because we've had that high. Here's our second lower high, right? So now, by now, you're looking for sell signals. I might have entered here because of bearish tweezer or the Harami pattern, but let's say I didn't. Let's just say I missed that one. Cool. I would have entered here as well. You see on the rejection of that close, it struggled. I would have been in there. So when it closed there, I've been in there. My TP would have been like, hey, where have we seen price go? It would have been there, which is why I'm saying that one entry is so important if you just enter once, because once you start entering twice and all of that, you start to hurt yourself. Because look here, let's say I added another one and did that. Now you forget about that trade, and you know your mind is now playing psychological tricks on you because you've forgotten that, hey, I entered on the basis of this, and here maybe not so smart of an entry. Went back to break even, and then came down and paid us, right? So Nasdaq manipulates guys who like stacking their entries. So your barcode. Sorry about the delay in video. My battery had died, but let's continue. So TP would have been here, right? Cool. Why at that line? Engulfing, I would have entered again. I'm like, oh, it's going further. So there, line, right? The line pays us. Cool. It would have went. So it would have. That's why I say second entry plays with you guys. Don't attempt it. I'm speaking from a lot of lost money. Engulfing, if you just left it there at that one trade, you would have made your money. However, let's say you did that and then you added, nah, you know, it would have played with you. So cool, always leave that one entry, bam, TP hits, we're happy. Especially if you have a funded account. Why are you stacking trades? You know, either way, you're gonna walk away with more money than you would have made if you were using your own personal funds. And yeah, it keeps going, guys. As I said, we have a mini downtrend there. We can, you know, look at now this and then say, okay, cool, engulfing, added line 1, TP1, line 2, TP2, you know, and it keeps going. It keeps going. The strategy pays, guys. You know, sometimes you got to simplify things. You got to simplify things. You really got to simplify things. There's a larger trend line as well if you want to do that. I don't know if you guys can see it here. See that? That's larger as well. And remember that trend line acts as our points of interest. So let's call it POI. Why? Because every time it's there, it's time to get interested. And remember, another thing I'd said, these lines will continue to pay you later. So you don't have to necessarily stress about them. Just know it's drawn out there. When price comes back there now, you start worrying, you know. So for instance, I said wherever price does funny things or wherever we have rejections. So let's say I would have drawn that here, right? Then when price came back here, I would have started paying attention. However, it would have I might have missed that entry. But once I saw this forming a downtrend, I would have been in there. It came back. So the lines act as a region. You will remember me saying that. That's why I like drawing rectangles. That represents this area better. But cool, another downtrend. We would have been paying attention to this as well. That's where we would have caught that entry. And yeah, that would have stopped paying us. But we would have left it there because the next time price wants to come all the way to 29,000, that might be a point at which it turns or a breakout that confirms our buy, right? So you leave it there. It will pay you later. And even this now, in this trade. So markets are closed right now as I'm recording this. But let's say they open, right? Sometimes it opens in a gap. It opens in a gap here. Cool. You just wait it out. What does it do once it's here? Does it continue? Does it, you know, want to break out of that? And yeah, that's how to trade the DAC, guys. I hope this was really helpful and insightful. And yeah, please like, share, what, all those things on YouTube.